Mutile mic.
So welcome everyone. Welcome to today's session. Today's topic is going to be the characteristics of reversal patterns and entry confirmations on reversal patterns. So before wasting time, guys, I'll start by showing you a double top. So obviously I'll start by drawing it to you, roughly showing you how a double top is. But now let me do it this way. Let me show you a double top first. As we all know, like this is a double top. This is how a double top looks like. So we all know that double top reverses the market from an uptrend to a downtrend. So from here, guys, what I want you to know, or what are things that you should know before you trade your double top is, or how to confirm your double top and take interest in the double top is, first thing first is, you should know that a double top only appears on the highs of the structure. On your highs of the structure, it appears on the highs of your structure. So as it appears on the highs of the structure, we always anticipating what the market to reverse from an uptrend to a downtrend. So it appears on the highs of the structure, and we always anticipate what reversals whenever we see a double top on our highs of the structure. So don't be caught up with fake reversal patterns that appear in the middle of the structure. For an example, if you see a double top, let's say you've highlighted your high and your lows of the structure. If you see a double top appearing let's say this is your low and this is your high, and price comes again to test to lose, and then you see a double top here in the middle of the structure. Never anticipate that price will reverse to the downside because of, we all know, for double top pattern, for a double top to play out, it should be on the highs of our structure. This is where we should be anticipating to see the market to reverse with a double top all the time. So in most cases, the double top tends to react well when it appears on the highs of the structure. Here, it might be tripping you as a retail trader, but here it is a confirmation that the market now has lost interest in moving to the upper side. Now it is willing to reverse to the downside. So now, whenever you see whenever you see a double top, pardon, let me see who's the first. Okay, welcome whoever you are. I can't check who you are, but welcome. Ne? So whenever we see a double top on our highs of the structure, we always know that the market now is willing to reverse to the downside. But then, how are we going to see this is a double top? The double top is supposed to be in this main. Your first leg of a double top, the first leg of a double top, should the market should approach in an impulsive manner. Then from here, it should come in a corrective manner. Not all the time, but it should come in a corrective manner here. Give you a test on the previous lows, this one, and then start to move to the upper side to complete this structure here as it was giving us a reversal structure to the previous low. And we always know that whenever the market approaches our sensitive level or our lowest low of the structure in a corrective manner, it tends to reverse to the upper side. So then from here, you will see price again starting to do what? A corrective approach to the previous high. So in most cases, you will find that the market is giving you what? An ascending structure on the second leg. So on your second leg, you should know that whenever the market approaches in a corrective main, chances of it to reverse are high as it has done on the previous leg. So now when the market gets here, this is where you are starting to anticipate what? That price will give you what? A double top and then start to reverse to the downside. But then how do you confirm that this is a double top? It should have a corrective approach to the second touch or the second leg of the double top. Then from here, it should start to do what? It should start to move to the downside. Even first leg, which will be in an impulsive manner. And then obviously, let me show you what it will do. Because of now, this is a structure that it will have created to you. This is a structure that it will have created to you, which is what? An ascending structure. So we know from an ascending structure, price has to reverse to the downside. Now, whenever price gives you an ascending structure, within a double top or on a second leg of a double top, it adds more probability to you that price will fail to break above and then it will move to the downside. So now, what you should expect from the second leg is to see high momentum movement to the downside. You should expect the second leg here to have high momentum, to be in an impulsive manner, as we all know that high momentum is an impulsive drop to the downside. So all the time, whenever the market gives you a second leg, from the third touch or the second touch of your double top, it should start to move in an impulsive manner. Then for you to take your trade, because of now you're gonna be testing your double top, you should wait for at least price to break what your ascending structure in an impulsive manner again. Then from here, this is where you're gonna be taking your low risk entries rather than taking your entries where exactly on the highs, because we all know we don't control the market, but we follow the market. So if it happens you want to take a high risk entry, it might happen that price was creating a false or a false pattern that will trap you and think that the market is going to reverse, and then it will come to our highs, break your highs, give us a continuation, and then continue to move to the down to the upper side pattern. So it's better for, or it's better to wait for price to move to the downside in an impulsive manner, break your ascending structure here, and then give you what, a continuation, if it has to give you a continuation below what your ascending structure, or after it has broken out of the structure. Then whenever the market has given you an impulsive drop followed by a continuation, like, it is much easier for us to take trades, because of now we will be confirming, or will be having confidence that the market now has given us what, an impulsive drop to the downside with a continuation. So we all know what a continuation does, or what it represents. It represents an opportunity for us to enter the market at an area of value. So now, as the market has broken out with an impulse and continuation out of your ascending structure, now the following movement is supposed to be what, an impulse, because we all know, according to nature theory, the market moves in two phases: an impulsive manner followed by a continuation, or a corrective phase, which is what, a continuation. And from this continuation, the market is supposed to give us what, the last leg, which is what, an impulsive manner to the downside. So now, if the market is broken out of your structure and gave you a confirmation of a continuation pattern here, so the probability tends to be high, then for us to take our trade, it will be easier, because of now we will be having what, confirmations and corrective approach to our previous high, which is our sensitive level, or our highs of the structure. So we all know whenever the market approaches in this manner, it will reverse. So this will be our first confirmation, the corrective approach to the highs of the structure. So the second confirmation here will be what, an impulsive break of the structure that we're having here, which is an ascending structure. So whenever you take your trades after a breakout on your ascending channel, or your ascending structure, or any structure that it will be giving you, it might give you a rising wedge here, but in most cases it will give you what, an ascending channel. So when you take your entries here, guys, for you to set your target, you should set your target, your overall target is the 90% rule of the ascending structure. Then the second touch of the ascending channel should be what, your first take profit. Then your last take profit will be where, will be on the 90% rule of the structure. So for me, it will be safe for you to wait for price again to do what, to do the very same thing that it always does. It should break here, this low, to an impulsive manner, give you a continuation below, and then from here, we know that price has to give us what, an impulse to the downside. So it will be safe for you again to do what, to add more trades here, because of now you're having what, continuation pattern here on a double top. So if you check the overall structure, it will be what, a double top. So now you will be trading what, a double top, because of this impulsive drop will be confirming to us that the double top now is playing out with an impulsive drop. From here, this will be our neckline of a double top, will be our neckline. So from here, we will start to anticipate what, we will start to anticipate that price, when price gets here, it should again give us the same thing that it does, because we know the market repeats itself. It is a series of patterns that repeat itself. So from my experience, I've seen that the double top, after it has approached our neckline in an impulsive manner, what it will do is it will give us again a continuation here, continuation pattern, and then move to the downside, or it will break this low, give us a retest in a corrective or in a continuation manner, and then continue to move to the downside. So now it will be again an opportunity for you to enter this trade, because you will have maybe missed, or maybe you will be not having confidence to take this trade because of you are not going to be sure that this is a double top. But whenever it gives you an impulsive second leg, it has probability again to this trade that the double top will play out. And then how you're going to take your trades after it is broken out, you should wait for again what for a continuation pattern below your neckline after it is broken below your neckline. And then from here, this is where you're going to take your entries. This is where you're going to take your entries again. If it doesn't give you a continuation pattern, it will give you a retest. It will give you a retest. But a continuation pattern is also a retest. But now it will be more probable because of now it is what a continuation pattern to the downside after an impulsive move and an impulsive break on our neckline. So for you to take your entries here, it will be much safer because you will take entries according to the structure that you are having here. It will have broken below our neckline of our double top. Then what happens is for you to set your stop losses, guys, you should wait for price again to give you what maybe it is giving you an bearish flag. From your bearish flag, guys, if you're going to take your entries, you should wait for price to come where on your highs of the current structure. Remember, you sell the highs, you buy the lows. So for you to take safe entries here, you should wait for price at least to come to the highs of the current structure. Then from the highs of the current structure, this is where you're going to be taking your entries. The stop loss should be above the bearish flag that it has given you. It should be above, not more than 30 pips, but it should be 30 pips or more, but not more than 30. It should be at least 35 pips or 30 pips. Then from here, for you to set your targets, guys, you can take any tool that you can measure the distance from your highs of the structure to the neckline, and then from here you take your arrow and then you put it below. So in most cases, price will give you the same movement or it will cover the same pips that you have measured using what and your arrow from your highs of the structure to the neckline. Then from here, this is how you're going to know that this is a double top and this is how you're going to trade it. Either you take high risk entries on the ascending structure that you see on the second leg, or you wait for price to give you an impulsive drop to the downside, reach your lows of your double top or your neckline of your double top. Then from here, break it and come and give you what a continuation pattern below your neckline. Then this is where you're gonna be taking again your second entry, or this is where you're gonna be taking your first entry. So this one is gonna be much safer than taking a high risk entry. After you have like maybe managed to backtest the double top and know how it plays out, you can maybe now be able to take high risk entries. But for now, for you to take safe entries, you should wait for it to break your double top neckline and then give you a continuation. Then this is where you're going to be taking your entries. For an example, let me show you on the chart. So the price that I'm going to be using, or I'm going to be using the chart of XAUSD. Why am I going to use it is because of it has given us clear structures of how a double top plays out. So now I'm going to be showing you on this one that we had here. As you can see, price now give us what here. Let me zoom so that it can be clearer. I hope you can all see. Then let me move all this thing. As you can see, like this is a double top. This was our double top here. And then now check the nature of the market here. Check the nature of the market here. It was in a corrective main. It is not visible that much here. You should go maybe to your smaller time frame to see that this is a double top reaction, or this is a ascending structure in a reversal manner. So after this, look how price managed to push to the downside. It managed to give us what an impulsive drop and then break out of your ascending structure, giving us a continuation pattern below our ascending structure. And then as you can see, after it is broken below our ascending structure, it went straight to our 90% rule. If you're going to take a high risk entry, obviously you should have your target. And then after here, look how price reacted. Price managed to break below our neckline here, gave us a retest, and then it managed to do what? It managed to cover the same peaks that I was showing you from the neckline or from the highs of the structure to the neckline. This is how you're going to measure your trades, how you're going to set a target. So as you can see, now price for me managed to do what, to give us what, an impulsive drop to the downside, and then started to give us what, a continuation here. But we do not consider this continuation because of what, this will be our target according to what, to how we know a double top plays out and how we're going to measure our double top target. So now, as you can see, this was our previous low here. Hence, we managed to see price starting to give us what, a test here. But because of now we use this tool to measure here, this was going to be our take profit one, their overall take profit of a double top. Now, from here, you will wait again for price to give you what, either a continuation or a reversal structure, then it will move to the upper side. So this is how a double top plays out in most cases. I hope you all understand what I'm saying now with a double top, or how to trade a double top. Then I'll move again to a double bottom. The double bottom pattern, a double bottom is the same as a, a double top. The very same thing that I was telling you, you should do it on your double bottom. It should have what, impulsive drop on the first leg, give us what, corrective approach to our previous high to create what, a neckline. Then from here, it will move again to the downside in a corrective manner. Corrective manner. Pardon me if my drawings are not that clear, but this is how a double top will react. Then from here, it will start again to push to the upper side in an impulsive manner. So obviously from here, you either going to take high risk entries after you have back tested the double top, or after you have train your eye to spot these patterns. Because once you see all those patterns, or you train your eye how to read charts, you will be able to trade your patterns, or we can say once you see it, you cannot unsee it. This is how you're going to be able, after you have back tested and then trained your eye how to trade double tops and double bottom. Then I'll move again to a what, a head and shoulder setup. I'll move to a head and shoulder setup. On a head and shoulder setup, guys, it also appears where, on the highs of our structure. This is a head and shoulder setup, which also appears on our highs of the structure. So now we all know that this is a reversal pattern again, which reverses the market from an uptrend to a downtrend. So how are you going to spot an ascend or a head and shoulder setup? Your first leg is supposed to be a continuation pattern of the first impulse from life is good, my guy. So pardon me for that. Then on your head and shoulder setup, your first leg should be here. This should be an impulse. Then it should give you what, a continuation pattern of an what, of an bullish pattern. We should be either a bullish flag or a pennant, which confirms that the continuation of the market to the upper side. Then after it has given you a continuation to the upper side, it will come again here and give you what, a head of the structure, and it will come in an impulsive manner, give you what, a continuation of a bearish trend. Then after a continuation of a bearish trend, obviously this will be what, our second leg of our head and shoulder setup. So this will be what, again, our right shoulder. So our right shoulder is supposed to give you what, a bearish flag, which confirms bearish moves to the downside, or continuation of a downtrend. So from here, it will be confirming to you what, an an opportunity for you to see that the market has to continue to push to the downside. So it will be giving you what, a head and shoulder setup. So in most cases, you will see a head and shoulder setup being like this. Like you will see your left shoulder, and your right shoulder will be testing the highs of a previous shoulder, which is our left shoulder. So from here, for you to take your entries again, guys, after an impulsive drop, the continuation to you, it will give you what, an opportunity to enter the market in an area of veil. So in most cases, you will see what, a bearish continuation pattern after it has given you what, a head. After it has given you what, a head of our head and shoulder setup, we give you a second leg, which will be in an impulsive manner, followed by what, a continuation. So from here, this will be again what our neckline. This will be our neckline of our head and shoulder setup. So you're gonna be having two opportunities or type of entries there. Either you take a high risk entry here after a continuation pattern, or you wait for price to break your neckline, and after it is broken out of your neckline, this is where you're going to be taking your low risk entries, which are high probability entries, whereby price will have given you what an impulse correction, and then it has to give you an impulse again. So again, for me, for you to set your targets on how you're going to um close or take your profits on an head and shoulder setup, you should use again your tool, which is an arrow, or any tool that you can use. You can also use a box and say now, but I prefer you use what your arrow, and then you measure from your head of your head and shoulder setup to what to your neckline. From your neckline again, guys, this is where what you're gonna be doing to set your target. This is what you're gonna be doing to set your targets. So obviously after that, it should give you what the same pips it has covered or you have measured with your tool from your neckline to from your head to your neckline. Then after that, guys, you will have maybe taking your trades, safe entries of an head and shoulder setup. Again, you can also take your high risk entries on way or then continuation pattern, which is what a bearish flag. Here you can take high risk entries. I do not promote you to take your entries where on the highs of or on the head of your structure, because it is not yet confirmed either is a head and shoulder setup. It will be confirmed if it appears in this main. So now let us go again and check how it appears on our chart. I'm going to be using the same chart, which is gold. So now this is our head and shoulder setup. It doesn't have to be clear to you, doesn't have to be clear, but this is a head and shoulder setup. So now this movement here, guys, it was it was core CPR. So we know what core CPI does. It just pushes price in, it adds volatility to price. Maybe sometimes it breaks your highs and all the sensitive levels that you have catered. Then you will wait again for price to come to your structure that you have catered for. Then as you can see, obviously here, if we said this was our high here, let me put it here. If we said this was our high, obviously price came here to respect the previous high and then give us what a head and shoulder setup. This is a head and shoulder setup. As you can see, this is a head and shoulder setup from here. This is an impulse. Give us a continuation here. From this continuation here, it gave us what last leg, which is an impulse again. So as you can see, the last impulse was had low momentum. It didn't have high momentum. So after it has tested our highs, it then did what gave us an impulse followed by what a continuation pattern, which is this one, a bearish continuation pattern to the downside. So as you can see now, it is on our neckline here. Let me remove this so that our charts can be clean. As you can see, after it has given us a head and shoulder setup on our right shoulder here, which was a bearish continuation flag. Now, for you again, because of now you will be learning how to trade your head and shoulder setup. You see, if you're gonna use your tool again, measure the distance from your head to your neckline, and then say if you take your entries below after this breaking out of your neckline, this is where you're going to be taking your profit. Obviously, price will also move the same pips that you have used to cater or to measure the distance from your head to your neckline. So you see, this is how you're going to set your target. It is much easier to use this arrow or whatever tool that you're going to be using to set your targets, unlike trading without knowing your targets. So this is how you again trade what your head and shoulder setup. So same applies to an head and shoulder setup. It's the same thing that happens on an inverse head and shoulder setup. An inverse head and shoulder setup, it looks the same as your head and shoulder setup, but it is found on the lows of our structure. This is how our inverse head and shoulder setup looks like. This is how our head and shoulder setup looks like. Obviously, it is an indication that the market will reverse from a downtrend to an uptrend. So now, as you can see, the market now has given us what impulsive move and then give us a continuation, and then this would be a corrective approach to the downside, then give us what, an impulsive move to the upper side with a continuation pattern. Then this is where you're going to be taking your entries again on the lows. You buy the lows, you don't buy the highs. You buy the lows of your continuation pattern. You will buy price here, and then obviously you use the same tool again to measure the distance from your neckline to your, from your head to your neckline, and then say now price obviously will move the very same peak that you have measured with your tool from your neckline, or from your head to your neckline, from your head to your neckline. Then when you take your entries, it's either you're going to take high risk entries where on your continuation pattern here, pardon, I used the wrong tool. You want to take your entries here, which are, this one I prefer them as high risk entries because price might continue to push to the downside. Then this is going to be your high risk entries, or you wait for price to break your neckline here, and this is where you take your entries and then you push price to the upper side according to how you have measured your distance from your neckline to your head, from your head to your neckline. Then again you have what, we have a descending channel. Let me show you a descending channel, how it is. A descending channel, this is how a descending channel looks like. This is how a descending channel looks like. So we all know that the market will reverse from the pattern that it will have given us, which is what, descending channel. From a descending channel, what we are expecting price to do, we are expecting price to push to the upper side. So how are you going to spot the descending channel? Here, price should give you a first touch, second touch, and then this will be your third touch. On a third touch, we all know that the third touch has high probability, or adds probability to a trade, whereby you might see price pushing to the upper side, breaking your structure, and then obviously going to complete what, the 90% rule of the structure. The 90% rule of the structure. This is how you set your targets according to a descending channel. So this will be your first take profit here, whereby the market will be testing the price for the second time. This would be what, your second take, your first take profit, then the overall take profit is the 90% rule of the ascending structure. So how to spot your ascending structure, or what are the characteristics of an ascending structure? Here, obviously, it should give you an impulse, give you a correction, impulse, and then give you a corrective approach to the downside. So we know whenever the market approaches our levels or our previous sensitive zones, which is here, it will be what, our supporting diagonal trend line. If the market is going to approach in a corrective manner here, it will be what, a descending channel within our descending channel. So it adds probability to this trade. In most cases, you will see that the third touch might have a double bottom, or whatever pattern that reverses the market from a downtrend to an uptrend. Then what happens is it's up to you whether, here it's up to you whether you take high risk entries after you have seen what, a double bottom, or whatever pattern that you will have spotted here, or the market will have given us here, and then this way you're going to take your entries, and then your stop loss should be below your previous low, obviously not more than 30 pips. Then your first take profit obviously will be on okay, here this is where you're going to say now, if price is going to give us a bullish break, this is where we're going to wait for a retest, and then now this is going to have our first take profit. If price breaks out of your structure, then the 90% rule will be our overall target. But now, because of we will be trading what's happening inside the structure, if you took your trades here, this is where you're going to take your first take profit inside the structure, and then you wait for price to break your descending channel, give you a continuation, and give you what, an impulse to the upper side. If you take low risk entries after this breaking out of your structure, this is where you're going to say, this is my first take profit, and then this is my last take profit. Then from here, obviously, for you to spot this one, it should be on the lows of the structure. Your third touch should be on the lows of the structure. Should be on the lows of the structure. So the very same thing is the very same thing that happens on an ascending structure, which is the twin of this one, but vice versa. It is twin of a descending channel, but this one is an ascending channel. So the third touch also supposed to be in an impulsive manner. Then after this broken out of your structure, it's supposed to give you what, retest in a continuation manner, and then obviously it will move away to the 90% rule. So now you will also cater how this is how you're going to cater for your structures. This is how you're going to cater for your structure. And obviously you are going to have two options. Either you take a high risk entry here or you take a low risk entry after price has broken out of your ascending structure. Then now again having what I'm just showing patterns that always appear on the market. I'm showing you patterns that appear on the market now, or high probability setups that always play out. So let me show you how an ascending channel looks like on the, on real chart, on real chart, on real chart. This is our ascending channel here. Okay, let me go to my smaller time frame. It should be my 5 minutes so that it can be clearer to us. I want to make it clearer to us so that we can all see how an ascending channel looks like. This is also an ascending channel. This now is also an ascending channel. But now I would like to use this one because now it is where it came from our lows of the structure. I'm going to move everything here so that everything can be clear for us. As you can see, this is our high of the structure, and this is our low of the structure. So now, as zooming in, you can see now what price did. Price started to give us what an ascending structure here, even though it is not that clear. Even though it is not that clear, but this was an ascending structure here because we know the market is not perfect and we are not looking for perfections from the market because if we're looking for perfections, you're going to fail to a spot setup and then going to lose trades. Now, this was the ascending structure, either in first charge, there's a first charge here, second charge, and then third charge. As you can see how a third charge plays out, it moves in an impulsive manner, give you a continuation, give you an impulse again, break out of the structure with a continuation pattern here, and move to the downside. But now let me show you the clearest one. The clearest one happened after core CPI. It happened after core CPI, which was clearer on a 1 minute time frame. Let me show you on a 1 minute time frame. So I'll need you to be patient with me just for a moment so that I can move back to where price give us an ascending structure. After core CPI, I just want to show you after core CPI what happened. CPI, this is what happened. As you can see on a 1 minute time frame, this is where we wanted to see what's happening with the price. The price give us what again an ascending structure here. Is an ascending structure. Remember, we're not looking for perfection on the market. We are looking for reversal patterns that will confirm us to take our trade. So now here we have both an ascending channel with an plus a descending channel. So now, as you can see, this is the lows of our structure here. As you can see, this is the lows of our structure, and then this is the highs of our structure. But then price didn't come to test this lows here. It gave us what another killing approach to the downside. So now this was our descending channel, this is our ascending channel. As you can see, these patterns look the same, but they are not exactly the same, but they all represent reversals of the market from an uptrend to a downtrend. So now, as you can see, this is how an ascending channel played out here. This is how this is how a descending channel played out here. This is how a ascending channel played out. So here, as you can see, after your third charge, after your third charge, after the charge price gave you an impulsive drop to the downside, breaking your ascending structure, giving you a continuation to the downside, or it will test that it has broken out of your ascending structure here. Then from here, you if you have experience or after you have backtested your prior or your ascending channel, you can take your entries here as high risk entries, and then the stop loss will be above, with not more than 30 pips, but 30 pips or less. And then obviously your first take profit will be this one here, the second touch of an ascending channel on our loser structure, and these are going to be our overall target, the 90% rule. So for now, guys, because of we only left with few more minutes, I can say we can call it a session. I hope you all maybe learned some of the things on how to confirm and how to take entries according to the ascending or patterns that the market presents to us. So